Okay, people, welcome back to the Trading Journal, the 9 to 5 Trading Journal with Chooks Nikki on the channel Plenty Talks with Chooks Nikki. It is fun having you guys here today and seeing you guys having to come in here and see these videos. I would love to hear from you guys. Go down to the comment section below if you've been on this channel for quite some time and drop a comment. Hey, it's not my first time here, or you could even just say hi. It doesn't really matter. Drop a comment below in the comment section. Let's get talking. But with that, let's head into today's business. Today's business is all about what happened yesterday. Basically, yesterday something happened. I took a trade and I'm not feeling so nice about that trade, honestly speaking, and I haven't recorded it. So today we're going to be recording the trade I took yesterday, seeing the analysis behind it and possibly something I missed. If you're trading, well, you'll get to learn how to not miss those kind of things or what to watch out for. I feel like that trade is not going to be going good. But before we dive into that, let us dive into what really matters. A lot of the people watching this channel do not subscribe to the channel, and I'd love to see many subscribers. I'd like to see you subscribe, so please go down below and hit the subscribe button and also click the like on this video. It would do me a whole lot good and also push these videos to more people so that they'll see the reality of a real trader. Well, not really a real trader, but a real trader who hasn't made it yet. But let's head into today's business. Today's business, something I noticed yesterday, actually 2 days ago, I think that was on Sunday. Yeah, so on Sunday was, this week is riddled with plenty of news, like a lot of news. Yep, there's so much news today, or rather this week, that trading seems quite scary. The truth is, we all look for news. Okay, not all of us swing traders, we always look out for news, and news is more like a volatility to us. But at the same time, it is quite good and scary. It has its advantages and disadvantages, right? It is good because there will be enough orders coming into the market, and the price is tending to move in a certain direction. But it is bad because if you cannot tell that direction, you are most likely going to be in the wrong and you will become liquidity. So yes, the news is a good thing that this week is filled and riddled with lots of news, but it's also a bad thing because we do not really have certainty of the direction the market is going to take. So it's all about balancing the equation. Okay, I think the news is going to go in this direction. You take your risk management and you take a trade. But if you think it's going to go in any other direction, just do the same thing. You take your direction and you go with your risk management. But if you feel like it's way too risky for you, you could just step out of the market and let it be. But nevertheless, let's head into today's movement where I did some certain things. Well, yesterday I placed a trade, and right now I can see that trade really itching to kill me. Like, it is really going to kill me right now. Well, let's take a look at the analysis, right? Let's take a look at the analysis behind that trade. So we're going to head straight into making this a full screen, and then I think I'll remove the trade stuff from the whole page. Yeah, you can always see the P&L here. I'm really down in drawdown. That's like 50% in drawdown already. And it's dropping to an extent. I hope it drops. I hope. So on the monthly, what happened? The monthly, I found this fair value gap, or rather imbalance. I like to always tell you guys, or rather imbalance, so that you guys do not see it as just like ICT terms, but also see it as an understanding in the market. So we found this imbalance, and I found price not really high. Price was going down, right? Price is going down. This month, last month produced a very long candle. That is a very bearish move. Now, after every bearish move, there has to be a pullback and possibly a small pullback before a continuation, or sometimes they could be just straight up continuations, right? And then I said, since I found the monthly fair value gap, I don't want to check the weekly for fair value areas and the rest. Let's just head into the daily, right? And on the daily, this is what I observed. So when I came into the daily, I found this fair value gap coming down, but I saw it properly mitigated. So let's just head straight into that daily fair value gap before I come back. I saw this daily fair value gap and I saw it mitigated, rejected, and price came down here but couldn't find its bearing, started going back up. So I went into the weekly. Now at this point in time, my head was all bearish bias, right? I'm all bearish bias. And then I went into weekly. And weekly, I'm finding a fair value gap. Found the fair value gap that ends right here. Along with the fair value gap, we have a weekly last line of defense, meaning price has come back and mitigated the fair value gap and rejected it to an extent. So I went right into the 4 hours, and on the 4 hours I saw that rejection like this, fair value gap in, and then the fair value gap out came here, but price made that move, went back up and made down, and then came back down. So what am I thinking? This is how it is. There are two things, right? There are two things. Price could do these funny sets of things. It could mitigate a fair value gap, an imbalance area. When it mitigates that area, it pulls down, but if it doesn't have enough power to pull down enough, it has to now sweep that fair value area, the mitigation zone, that is the liquidity point it created up there. It has to sweep that liquidity from that place and then finally flow down. So that is the other flow going through in my head. What I was thinking, or what I was thinking yesterday was price came up here to just mitigate. And when I noticed on the 4 hours, I saw this huge candle in, and then after taking liquidity, I saw a huge candle returning out. As my thought pattern was, okay, it seems it was a liquidity sweep at the weekly last line of defense, right? That is what I felt. But looking at it right now, because that was the trade I took, you could see the trade is leading me straight into badass losses. I don't know if it's going to turn around and become good. We cannot tell. The market is not ours to own. I might lose a lot of money right now, but this is actually a demo account though, so it's a lot of money, but it's a lot of demo money, and a lot of people will be like, it's just demo money. But nevertheless, the demo money is to learn, right? Using is to learn. So nevertheless, what I noticed just now is this. So on the daily, what I just noticed this morning was that this fair value gap has finished its job and it did not follow through. So it seems like price is now actually repricing. Why did I also say that? Now when I came into those 4 hours this morning, I noticed something. I entered the trade here, even though it was quite way away from this. I didn't study the chart deep enough if I entered this trade. Probably, yes, that's an error on my part. But nevertheless, let's see exactly what I am looking at right now. So what I'm looking at right now is that this fair value gap failed to go through and is now being, mitigated. The only reason why price should go further down, like from that particular point, you can see we have a daily target right here. If price is going for a low, right? If price is going bearish, this is its daily swing point. If price is still going to be bearish, but something I just noticed is this. So allow me zoom it into the zone, and right there. So after this fair value gap, this weekly fair value gap got mitigated right here. Price staggered a little bit due to Christmas break and the rest, and then made its way to reaching its targets. This was its target. Creating the target, it created a fair value gap, and that is literally a fair value area. After going through the fair value gap, it created a fair value gap that was meant to hold, and now this fair value gap is not holding. If this fair value gap is not holding, on the weekly, we only have one last defense for the week for it to really occur, like for it to even happen. It is this particular high which I am looking at, which I was looking at and I am still looking at. This high, looking at it right here, this high is supposed to be swept if price is supposed to go lower. This high is supposed to be swept just like this candle right here, and price is supposed to find its way downwards. But right now, as we can see, we're currently in the Sydney session. Is this Sydney or Asian session? This is Sydney session, I think, or Asian session. This is Asian session. So we're currently in the Asian session, and after this sweep, we've expected a sweep, or rather I expected a sweep when I found this bearish candle. You can see my entry was here right after that bearish candle. I expected this sweep to hold, and then price would continue to price downwards and head for where? My daily liquidity, my daily expectation. But now price seems to have changed its momentum, and if you look on the 1 hour, you'd see it came down but never took away. It never took out this 1 hour low. It hasn't taken it out, or rather, let's just wait till the daytime and see if it will take it out, or it will take me out before daytime, basically, one of the two. So if I'm going to lose this trade, it's definitely going to be within the next 24 hours if I'm going to lose this trade. If I'm not going to lose this trade, well, in the next 24 hours I will be quite certain. But right now I am feeling 85% sure that this trade is going to go off. Now, the mistake I made was this. So I'm coming from a weekly perspective, right? I'm coming from a weekly perspective of a weekly area, which is a weekly full context. If I'm coming from a weekly context, I'm supposed to find a clear 4 hours sharp turn before I make a trade. Something like, let me look for a trade that has something that looks like a good sharp turn. Nope. Yeah, so good. So something like this context right here. You can see this context right here. You'd see this context right here. I'll take away the this. So in this particular context, you'll notice this. So there's a fair value gap in, right? There's a fair value gap in right there. And then there's a void, but this void doesn't really matter. But what you also notice is there's a fair value gap out, and this is on the 4 hours. So this is what I was supposed to be looking for: fair value gap in, a fair value gap out, and then my target would instantly become this point right here. And you can see how it delivered over time, in a couple of days. That is what I was supposed to look for. The mistake I am currently making, which I am still holding on to be honest, I am holding on to a mistake, is that I didn't see a fair value gap in and out. I found a fair value gap in. Yes, that is for sure. This is a fair value gap in right here. But I haven't found a fair value gap out, and now I am likely printing another continuation of fair value gap in. If this continuation should hold, it means that this short-term low is now extremely valid. When I say it's not extremely valid, it means this low is now exactly what is properly protected. It means we are now seeking liquidity. It means what again? It means price is going to start finding its way to take out this high, and furthermore it continues this high, and if it continues this high, and if it continues this high. So right now we are literally just sitting down waiting for the market to do whatever it needs to do. But I'm not going to just sit down on my hands and let it run, right? I am looking forward to trading another market also while I watch this market. I haven't chosen the market yet. So do we dive into choosing the market right now together? Do we dive into choosing the market? I think we should dive into choosing the market together on this video. I hope the video has not been long, but let's just get the market to work on. Now, the EURUSD, my beloved pair. This is the one pair I am always coming back to, and you know, this has become my primary market, and then any other market whatsoever. My primary market, well, liquidity 1 has been taken, points 2 has been taken. I do not need these points anymore. The only thing I like to leave on my trades are old positions, and I just keep them hidden. So recalibrating the focus, we have a huge monthly fair value gap that has been mitigated right here by this candle, which was November. So it got mitigated November, got rejected. If it got rejected, it means this has become the monthly low, which is the monthly last line of defense. If this is the monthly last line of defense, we have a very simple expectation, right? The expectation changes instantly to this. So it means my new, from the candle right now, this particular candle printing, we can tell that, oh, I'm not supposed to even name this like this. I'm supposed to use a straight line all the way to the end, because I would love to see it on the lower time frame. So on the monthly low, if this is the monthly low, it now means my monthly target is most likely the monthly fair value gap. So I would have to exchange this from Lord to monthly target. So this is currently my monthly high view. It means our market has changed to becoming, on the monthly, it is now bullish. So this is how I like to find my probabilities of the market. On the weekly, we can see that clear rejection here, price printing up. Even though this week just started yesterday, this week has printed a bullish trend, and right now it seems like it's, repricing. But following the last sets of candles, like forgetting about this candle that's currently printing, last sets of candles tell us price is rejecting and pushing back up, putting my weekly target right at the top of this candle. So this is becoming my weekly view. This being the new weekly view, I can send this guy to the village, and this still be my monthly target. You can see that the fair value gap is right there, heading for the monthly. And on the daily, we have most likely going to be printing a fair value gap today. But the fair value gap is quite scary. It's not really like a nice one, honestly speaking. Overall, we're currently bullish. That's the fact. It is clear that we're currently overall bullish. But I'm having a problem with this looks right here. This particular week right here is quite scary. It's quite scary, and I think it was caused by news, but it's quite scary, to be honest. Seeing such a week is something you should be careful of. We do not know what will happen today in this place, honestly speaking. It could end up, pulling down and giving us a fair value gap, but we're most likely going to be printing a fair value gap today. So putting this like this, I'll make this gray because it's uncertain. I think I'll make this greenish, green upwards, so that I'll know it's supposed to print a bullish fair value gap. Now, I have a monthly view. So on the daily, what's the daily target, right? Sorry, what's the daily target? The daily target is unknown, basically. It's critically unknown, but since the other two are bullish, I think this is most likely my daily target. So we now have a monthly, weekly, and daily target, all screaming boom, boom, boom to us. This is slightly bullish, actually. This is slightly bullish. Now that I have all bullish tendencies showing up on my chart, what do I do next? I'm looking for the fair value gap that is most useful to me. Now, if this is the target, I need to see a sharp turn at the bottom here, which is a fair value gap down and a fair value gap up. That is on the daily, basically. And you can see that's critically looked like what's printing right now. We've had the fair value gap down. If you can't find it, I'll find it for you. We've had the fair value gap down, and we're likely going to be having a fair value gap up. So if we have this fair value gap up after today, we are 85% certain for a bullish run. Like we're 85% certain that we can set our stop loss here and follow those markets all the way to at least this point, and then also this point. That's like putting your stop loss. If you are a long-time trader, you could do something like this. It's a very small RR, honestly speaking, very small one. You can see the first one is just 1.04. Let's put it right here. Yeah, so the first one is 1.04. The next target will be 1.43, and the final target is actually 1.66. So we just stop loss here all the way here, but this is only after this creates a fair value gap. If it creates a fair value gap, this is for the euro dollar, and this analysis is my baby. Like, whenever I look at this primary currency, I am at peace because I follow it every day. Unlike any other currency, any other market I open up, it's not an everyday flow through, so it's not really an everyday chase thing. I haven't had other markets that I am like this happy for, except this guy, the Euro AUD. This has become my second most loved currency pair to trade, and I think I'm beginning to like it because I have taken trades here. I have taken trades with GBP AUD before, and I think I'm beginning to have like an affinity to the AUD pair. So right here, this is looking like my next best thing currently. Not sure yet currently. So let's head into this guy's analysis. On the monthly, what's the perspective? I do not need to see my economic calendar showing up. I don't have a trade here. On the monthly, last fair value gap was here. Monthly view. This is a monthly Lord still being protected, and it's no longer in context. Basically, after all of this, it's no longer in context. It doesn't look like something that's going to really work anymore for any reason whatsoever. But this fair value gap is also no longer in context. It's too far away. But let's see. Now, I think somebody is wondering definitely what these lines are. If you have that question, I will not answer it right now. If you're wondering what this line is and how it works or what I'm using it for, drop it in the comments. If you do drop it in the comments, if I start seeing comments on this particular thing, that is the only time I'll explain what this is and how I use it and why I have it on my chart. But let's go straight into this week. On the monthly, we see the market really pushing downwards. The last market said we're moving for bullish action. But even though we're moving for bullish action, this month has been printing a bit of bearish behavior. The month recently started, obviously. But so it could be bullish, it could be bearish, for like a while. If it is going to be bullish, it could be bearish for a while, and then it starts to flip, which currently right now we are seeing a long wick already producing itself. The next thing is the weekly. On the weekly, well, a couple of candles say all bullish. This particular candle tells you very bearish, and then even with its bearish nature, it printed a wick at the bottom telling you price is most likely going to start redressing its direction. So this looks like the weekly outlook. This is the weekly outlook. If the weekly outlook is now bullish, you can see what I was saying is the monthly could be going bearish for a while, because this is just the beginning of the month, right? So the weekly is now bullish. I don't think you guys will be seeing this clearly if you're looking from a phone, so I think I should adjust this size to something 16. Yeah, I think that should be better. So bullish. And on the weekly, do we have fair value gaps? Yeah, we have this fair value gap. We have another fair value gap that I need to, rearrange properly. So this fair value gap ended right here, got mitigated, didn't get trade order on that. The fair value gap is holding, as we can see. The weekly Lord is right here, which is the last line of defense. So we're expecting two things, right? If price is going to be bullish, there are two things that could happen. It could either just start going back to being bullish properly, or it could pull down to collect liquidity first, that is, take out this low and then pull up. Now there are three things that can go on here. It could either just pull up straight up, which is, it could either just do what it's doing right now, pull up, that's one. It could do this as it is right now, go up, come down to take this liquidity and then go up, or it could retrace its way down to this fair value gap. Now this last two I do not know of. I swear, I honestly do not know of. If price is going to start finding its way down here, it is most likely just going to keep doing this. That is the one I'm thinking. If price is going to find its way all the way down here, it is most likely just going to keep going, sinking down. most likely. That's what I feel. So we can take away these three directions and just focus on what we have right now. To say, forget about the future, focus on the present. On the daily, right now, this daily thing is where the whole miracle is now. If there was a monthly fair value gap, right? If there was a monthly fair value gap around, let's say around here, if there was a monthly fair value gap here, then this current situation, where I would know, like this particular situation right here, I think I need a circle. This situation right here, I would be able to know that price is clearly now going for the monthly fair value gap. But now we don't have a monthly fair value gap. We have a weekly fair value gap, and this is also a weekly fair value gap. So they are not supposed to be. There's none bigger than the other or more important than the other. This is important as this. If this doesn't work, this could also work. If this doesn't work, well, this guy is being called for. But what we're seeing right now is clearly, I wanted to actually trade this market for a bullish run yesterday, but I noticed something, right? As soon as I saw this daily fair value gap, my head was like, we just need to be very careful around here. This doesn't look legit. This doesn't look like peaceful enough. So I went into the 1 hour. On the 1 hour, I saw a very strong bullish move. Oh, I don't even need to bother myself anymore. It's definitely coming for this weekly Lloyd. Why? We have in as expected, and you can see why I said my other trade will not work. You see this in right now? It went in and it's failing to follow through. Immediately we found small sets of outs. This is like a very tiny out. I think I will zoom into this point so that you guys will see how those things really looks like. It's a very small out. We've had another out, and then worst of it all, this low, this high is strongly holding. So right now I think I already have a second market to trade, and instantly we're going to go into this place. You're going to see the my method of calculating my loss, my stop loss. So today we have a trade. Currently my balance is not, this is not my balance, to be honest. This is not my balance. My balance is if I lose that money I have. You get, if I lose that money I have as a stop loss, I have less amount of money to trade with. So like I said, you're going to see me calculate my trade today. Now what do I have? I have a 10,109.78. My stop loss for this other trade is worth how much? 51.50. So minus 51.50. This is my actual balance. If this is my balance, I'm only supposed to use 0.5% of the accounts. Sorry, so that would be, oh, that was a mistake. I think I made a huge mistake right there. Sorry. Let's take this. Yep. So multiplied by 0.005. Yep. So this is my stop loss. My stop loss is supposed to be $50.29, which is $50.30. So I'm going to place this trade right now, and I'm going to place it with as close to $50 as possible. My stop loss, I'm entering this trade right here, stop loss right at the stop, take profits all the way to weekly low. You could decide not to go all the way. You could decide to come here, you could decide to come here, you could decide to come here. But I just want to just hold all the way to the end. I think I might hold this one all the way to the end. It's a 1 hour trade, so it will take like a couple of days, probably the whole week or 2 weeks. So let's place this trade, right? Let's place this trade. We hit the sell. Stop loss. I'm going to pull my stop loss and come all the way up there. Sorry, what did I do? 5. 665. 5. 665. 1.3 is supposed to be the original stop loss plus the 0.2, giving an extra buffer of 2 extra because at night spread increases. So I'll make it 0.5. That's 5.0. So that will be plus 6. That will be 60. So you can see where my stop loss is currently sitting at, and my take profit, I'll just pull it and put it. I don't really care about my take profit much. I don't usually calculate that one often. I'm more focused on the stop loss. Now I'm going to be increasing my lot size until I am as close to 50 as possible. So this is above my requirements. This is right there. You can see it's very close, 49 point something, and right there we place a trade. That's it. This is how we place a trade. So today you got to see me place a trade live, right, on this analysis part. And this is exactly how I tend to find a market to trade and actually trade the market. Also, I did not record this trade, so let's head into recording. We're going to record the first trade which was taken yesterday. I'm going to put this on the side. I like to have this cut side by side like this. Yeah, just like that. And I could keep this all in checks. Let's add the new trade. Today is new trade. Yesterday's trade, NZD. So this is actually a trade analysis. NZD to the USD. The class is currency. Entry time was 7. This was yesterday. Oh, it was at night. It was at night. 07:02 p.m. It's an analysis. I didn't check the news yesterday. I didn't even care about the news. I don't actually need to be checking the news all the time. I don't want to be writing it, but I'll be writing it now. I've not been writing that. A higher time frame perspective for this particular market. Let's go. So yesterday, higher time frame perspective was on the weekly. This was the weekly perspective. Hit the snapshot, copy the image, and put it back here. So my higher time frame was on the weekly. Instantly, why did I take this trade? Well, in the weekly, this was found. I would rush this part, kind of, you know. Alright, so you can see that entry right there. Weekly, daily, 4 hours, entry on the 4 hours. It's supposed to be a swing trade, but currently there's already lessons learned, right? There's like a huge lesson I have just learned, something I missed. There's a short market, lot size of 0.1. Mentality was quite logical. Yeah, trading probability, I'd give this, okay, currently it will be around yesterday it was around 65%, but I would like to comment right now. So currently it is a 20% chance of happening. Already I have like a huge lesson, right? There was already a huge lesson I learned, and I'll tell you that lesson right now. So the lesson is this: next time I should wait for a fair value gap in and a fair value gap out before I enter that trade. Yep, that, my dear, is the lessons I have learned. It's the lesson I have learned. Next time, wait for a fair value gap in and a fair value gap out. So copy the image and putting that in the lesson spot, right? Also, second mistake I made. There were 2 huge mistakes I made. Second mistake is, if I'm going to look for order flow, I'm supposed to look for 2 consecutive order flow, which is 2 fair value gap heading in the direction I am supposed to be wanting. So it was supposed to be fair value gap 1, which is this. this is actually a good one. And I'm supposed to see a second fair value gap at least anywhere here, anywhere at all. Fair value gap 2 heading for my direction. This thing is going to hit stop loss. Like, there is absolutely no need for me to assume, or anybody to assume, price is going to do something different. If you look here, my example right here, you would see that exact situation, like the void and then fair value gap. You can see, and then another fair value gap. That is order flow. 3 fair value gap heading in the direction. This is the target. And 1, 2, it was met. It was critically met, like heavily kissed, instant, like really kissed. So next time, 2 lessons learned today. Next time, look for the proper fair value gap, or 2 consecutive order flows, 2 order flows in the proper direction on the proper time frame. Yep, there it is. 2 lessons learned, and I think I'll also write it down here. Lessons learned, right? So when we're doing the review this week, I would like to put this would be like a very good highlight. Lessons learned. This lesson learned is a very big highlight for myself and every single one of you out there. This is a lesson you really need to take into account. Next time, we're going to wait for 2 fair value gap or 2 order flows. So I'm supposed to put the 1 hour image here. Okay, all right, so we have trades placed. That was the first one. The lessons learned, right? You just saw the lesson learned. Wait for 2 order flows or the fair value gap in and fair value gap out on that higher time frame. So what we are waiting for right now is the lock. I am literally praying for right now is I see another clear fair value gap bearish, meaning on New Zealand USD, we are hoping to see that they push price strongly to the downside. If they do that, then we are now more certain, around 45%, 50% certain that okay, price is going to print bearish for at least a while, maybe not hit the target but for at least a while. And if on the higher time frame that becomes a clear fair value gap, then we now know our target is going to be met. So on the 1 hour, we're praying for a fair value gap downwards. On the 4 hours, we're praying for another fair value gap downwards. Those 2 things happen, we really have a good trade on this game. But I doubt, I sincerely doubt that will happen. So we just recorded New Zealand USD. This is exactly how I take my trades. This is exactly how I take my trades. As you can see, this is exactly how I record it. This is perfectly the way I do it. You can see everything pure and clean. The next thing we need is to record the other one, but I'll do that offline. Now, today's video was quite long. Today's video was unexpectedly long. I did not even expect it to be this long, but if you've watched to this extent, I would like to say thank you for supporting, thank you for watching, thank you for also being diligent enough to stay here and want to also learn from what a beginner trader is doing in this market. And do subscribe to the channel. I would really love to see your subscription. You have a comment, you want to congratulate me, thank me, you want to comment on something, tell me, oh, you did something wrong, this would have been better. I would love to see your comments in the comment section. I want to have that community to speak with, talk with, and have to entertain and truly give the knowledge I am also learning in this market. Thank you all. I would love to stick to my discipline, but I have work to do, so I need to go freshen up and run out. This is Lagos and I am getting quite late, but nevertheless, catch you all probably tomorrow, next tomorrow, another day. It's been fun talking to you guys. Peace.